Good evening, traders. A very warm welcome to you all. I am Devang Mehra from the Financial Analyst, and this is the Pivot Point Trading module. In the previous video, Yash was there. We were honored to have him with us to guide you all through pivot points. Personally, telling you a little bit of a background, he is one of the best pivot point traders I know. We have given you a basic idea what pivots are to get you started with some basic strategies involving pivot. But if you're more interested in getting deeper into the concept, I would say Yash is the right person. He's a fine gentleman when it comes to pivot point trading. And he's been trading with Camarilla pivots for a very long time. He's a very successful trader when it comes to pivot points. So that's about him. I want to give you my own strategy when I talk about pivot points. Again, it has been inspired by the work of Yash. We're very happy to have him with us, mentoring you all in the markets. So why do pivot points work? I get asked this question a lot of times. In the previous video, you learned the formulas for pivots, R1, R2, S1, S2, etc. But why do pivot points work? A lot of people must be wondering that as I speak. So let me tell you a little bit of a background. I'll try to break it down as easy as possible. You have a candlestick. I'll draw a very poor image of a candlestick. It looks something like this. So any candlestick has 4 points. It has a open, it has a close, it has a high, and it has a low. There are 4 points in a candlestick. Can you look at that and tell me what, according to you, is the most important point in a candle? Which of these 4 points is the most important point? Think about it for a minute. So the right answer is closing price is the most important. And that is why in over the course you've heard me saying markets can open at any price. Who is responsible for the markets opening? It is the public. It is people like you and me. We can get the markets to open anywhere. But the professionals on Dalal Street are responsible for closing it. So markets can open any place, but they always close at the right price. Why? Because closing price tells you about what is the intrinsic value, what is the true historic value of the stock, what is the conviction in the market regarding the price of an asset. So closing price is very, very important. If I ask you after closing price, what do you think are two more important points? Think about it for a second. After the closing price, the important levels would be your highs and your lows. Why do I say that? Your highs and lows are telling you about two emotions in the market. The high is representing the emotion of greed. How much greed is there in the market? The higher a security is going, the greedier the people are becoming. And the low point represents the emotion of fear. I've already discussed this in the concept of support and resistance also. So the fear, the lower the price of an asset is going, the more fearful, the more scared people are getting. So if I take these three emotions, conviction, fear, and greed, and if I average them out, that is exactly what a pivot point is. Average of three most important emotions in the market. This is the formula of a pivot point, which Yash has explained in the previous module. So on the chart right now, I have already plotted my pivot points. How do you plot them? Go to the indicators tab and you have to search pivot point standard. You have to go on pivot point standard and automatically your pivots point will come on the screen. Yes, as he said, you can select Fibonacci traditional, whatever you're comfortable with. I just want to tell you in this module that pivot points work very well as support and resistance. You can see the Nifty 50 chart of 15-minute on the 11th of November. Exactly, this was my support. You can see on 12th of November, that was my resistance. And you can see earlier also around 4th of November, this point acts as support. So this is, I would say, the most pivotal point, the most important point on any day, on any chart. That is about pivot points. So now let me discuss about the strategy. Since you understood the concept of pivot, let me discuss a strategy that I am particularly working on and I'm using in the markets. You've learned one strategy from Yash in the previous module, and I will teach you a strategy right now, what we are using in TFA. So again, what I'll do is I'll just I'll basically open up the pivots. How I have got them, let me again go to the FX tab and guide you through. You search pivot points, click on pivot point standard. and you'll get something like this. So currently, personally, I love to trade the Fibonacci pivots. I'm not very big fan of traditional pivots. Both are fine. There are tons of examples. There are Camarillas, etc. But currently, I love to trade Fibonacci's. What is Fibonacci? That's another advanced technical concept. We'll not be covering that right now due to lack of time. But I am concerned with Fibonacci's, and I press OK. What's the strategy involved? So I am using the pivot points basically to set targets. Currently, how do you set targets? If you remember, currently what we were doing is, so for example, if I open some other chart like HDFC Life, so currently what we used to do was we used to use existing points as targets. If I look at the daily chart, this concept will become clear. So for example, if the markets, let's say, have to go below this point, if the markets have to go above this point, let's take a very simple example. This area is a resistance, correct? So if the markets break out, what is the target? I told you a traditional way, which is that you look at the previous data points. So all these levels, the previous highs or the previous levels, they become targets, and exactly market stops there. And exactly you can see even this level, the markets exactly stop there. This approach is not wrong. It's a traditional way of how technical analysts set their targets. But this is basically more, a lot of work is asked from your side because you have to manually look into the charts and make your levels. So you can basically use pivot points just basically if you want to make your work very easy to set your targets. I'll again go to the intraday charts of pivot points. So what we'll do is rather than just opening pivot points on the chart, I will forget about pivots for a second. What I will do is I will use my normal price action. So look at this data on HDFC Life. Can you see a resistance being formed over here? That's a resistance, or you can see a resistance formed over here. Let's take this example. This over here was a very, very concrete level, and this level was convincingly broken out. If you can see the chart, a 15-minute candle has closed above this. That is a breakout, so we have to go long in the market. So based on price action, we decided to go long. What is the target? Open pivot points, and you can see that your targets for the day will be, if you are buying here, target for the day is R3. That's all. I am using pivot points to set my target. I am not using it any other way. What I am using it is looking at the chart, I open my price action and find where my targets are. Let's look at some other examples so that the concept will be very clear to you. Okay. Can you also see that this area over here is a resistance? And this area over here is a support. So when resistance was broken over here, you have to go long in the market. Very simple, price action 101. But till how long? I don't know any levels. I can't use that traditional approach. So what you can do is open pivot points, and it is exactly telling you where you can go long. So the target number 1 is R1, target number 2 is R2, target number 3 is R3. So I've got 3 logical places to set my target and trade on that. If you get a movement higher than that, then you can trail the stop loss and accordingly go ahead. Otherwise, you can exit your positions here. Be safe because you don't have to earn millions every single day. Earning small amount consistently is also very important in the market. Let's look at a couple of more examples before I wind this concept up. Let's look at the chart of some trending stock, Tata Motors. Okay, so Tata Motors, what's happening in Tata Motors? Let's scroll back. I'm looking at the 15-minute chart. So basically for an intraday trader, you can have a look at this area. This area was a very, very strong resistance. You can see a support trend line is also jumping in. So when I get this breakout over here, that's a signal for me to go long in the market, open your pivot points, and you can see how things will work. So you can see very well that the first target is R1, second target is R2, and exactly these levels are achieved. Above that, you will get R3. Otherwise, you have to stop at R2. Let's see one more example before I wind up this concept. We'll see it on the charts of Tata Motors so that things are very clear. Okay, let's look at some other chart. Credit Access Grameen. Yeah, let's look at this chart. A lovely trade today in Credit Access Grameen. Right. So you can see over here that we had drawn this level earlier in one of the videos. This was a very important support for the stock. And once this level was broken over here, that was a signal to go long in the market. Obviously, by using the traditional analysis, you can say that this level is the target. That's totally fine. But I want more logical places. I open my pivot points and I can exactly see that my targets for the day are R1, R2, and R3. That's all. So what I'm trying to tell you is whether you go short in the market or whether you go long in the market, you can use this way of basically setting your targets. If you go short in the market, your targets are S1, S2, S3. If you go long in the market, your targets are R1, R2, R3. I hope it makes sense and this concept of pivot points target setting is clear. In the next module, we talk about risk management involved in the markets. Thank you so much.